All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Wednesday, October 2nd, 2019. October is off to a rough start. We're down SPY almost 2% here. Big flush down. Key level here, we talked about these open gaps. We already got through this one. We're testing this one here. We've gone through it. If we close above this level today, I think that would be a bullish signal. So if we can close, say, above 289, that would be strong for this market. If we close below that level, very good chance we test this bottom support level that we talked about, which converges the bottom of this range and the 200-day moving average. We're heading into the jobs report on Friday. I think that's going to be big, not in the sense that it's really impactful, just we're in this market where we react to everything, or the market is reacting to every little thing, especially if it's negative. So we're going to keep an eye out on that. We're going to keep the Q position on. We'll talk about some of our profit taking today. I mentioned some of it in the chat today if you haven't seen the chat already. But look at the Qs here. Big continuation down. We've got room to the 200-day moving average. Obviously, that's good for our bearish SQQQ position, IWM. Excuse me, also flushing down here, ready to test the bottom of the range. What was once really strong relative strength has become weakness again. We've got oil here testing the bottom of this range. This is going to be really interesting here. I think if we do come down to this level, I might just take a shot just because the risk reward is so good. No expectation on probability. You know, I would enter here, say at 1050. We'd be using UWT, but the same concept applies. Say we enter at 1055, place a stop maybe 1035, risking 20 cents for a potential, dollar type move. So that's like a 10-to-1 potential move. We don't care if we lose, 70% of the time on this, because when we hit, we can hit really big. So I'm watching oil very closely. I do want to see a big flush and then a potential rubber band type long setup. So watching that, home builders holding up pretty good today. If we look at nail here, nail is holding up right around the 9. Financials here getting hit but testing a key moving average. Semiconductors are actually holding up, all things considered, pretty good, right around the 50-day moving average. Brazil getting crushed. China not really crushed, holding up decently, and we're actually going to watch a few of these China stocks as we go over our stocks in a second. And then, of course, here gold popping, and then GDX will be popping as well. VIX is especially the triple leverage shares flying this morning. Let's get to current positions. First, we'll take a look at what the profit taking got out of team today in the 122s. We're down to 122.60 here. Now, I had a target all the way down here at 118. Decided to take the profit here just because we are in this, mentioned this in the chat, we are in this whipsaw type market. Entry was actually right here. We are in this whipsaw type market, and I just want to get the profits. There have been a lot of times this year where this type of thing has happened and gone for the bigger wins, and I just want to lock in profits right now, especially when I do have another short in there with the SQQ. So if the market still goes down, we do get to profit from that. And then same thing with Starbucks. Starbucks, I exited in the 185s or 85s. It's right at about 85 right now. Initial target was way down here, but the market's still beaten down. That there could be a bounce here. Usually I like to ride through them, but I do want to take profits right now. And what I would like to do here with both of these, if they do start to bounce a little and then break down, I would reestablish shorts on these. So that's the Starbucks and team covers today. And then we still have SQQQ on, which is the inverse ETF of the Q. So basically we go long to kind of quasi short the market here. And you see we're getting a fantastic move here. Entry was at 33.17, and we are already up 2 points on this. Target range initially was 37 to 38, even higher than that. If we can hit in the 36s, I might take profits early on that again. Also, it'd still be a nice win. We'll see how we want to play that. And then we have the two long positions still in play. Nvidia has not yet hit the stop level, and this is what I've wanted to do with Nvidia in the sense that I do think it has put in a nice pattern. It has been showing accumulation, and I wanted to be able to ride out any market moves. And so we used a smaller position sizing and a loose stop here. Stop is around 167, so we're still about 4 points away from that stop. So right at this point, unless there was another big flush down, don't have to worry about it too much, and it's held up well. Hopefully it stays above its 50-day moving average, and even if it did hit the loss, it would be under a 1% loss on that one. And then the other one is Lulu. This is another one where I think I might have said 5 points. I'm going to go 6 to 7 points. So I'll make the decision on where I want to get out here according to what I feel like the market's doing, but it is holding up well. Up over the 50-day moving average still. 186 to 187 is going to be the stop, so that's going to be like 6 to 7 points. And again, that's way below the 1% risk. So we're risking less on these than normal. So it would normally end up equally, maybe if we lose on both of these, would be 2%. If we lose on both of them right now, we'd be at 1 point, maybe around 1.3% on these combined. So that's the idea here with the Lulu, holding the Lulu and the Nvidias. So 3 positions left right now. Now let's look at some stocks here. If there is a market consolidation or a little bit of a bounce and another move down, we go to the software stocks again, like AYX. If it were to bounce, like Team. If it were to bounce, like Coop. If it were to bounce, and it kind of is bouncing already right now. Coop has been one of the leaders. Cyber, again, if these things were to bounce and fail, we could reestablish shorts on these, and then index shorts. And maybe a few others we could add to them. For potential longs, if the market starts to bounce here, I like Baba. Baba is actually green today and has put in this kind of piercing pattern here where it looked like it was flushing down and has come up into the other candle. So Baba is really good. Baidu is also showing relative strength. Some of these China stocks are. Let's take a look at Huya real quick. Putting in maybe a little bit of a hammer at the moving average. Disney, while has been very weak of late, is coming into the converging support level that I was waiting for. I drew this line a long time ago, maybe 2 months ago, and we are at that level right now. So I want to see how it reacts to this level and the moving average here. Now, on the flip side, it does kind of look like a head and shoulders topping pattern as well. But if we see strength here and we start to see a bounce, especially if it gets up over the 9, I would really like to go long Disney. If it gets below this level, we could short it. So there are a lot of stocks here where we can go, okay, here's the long thesis, here's the short thesis, and it's kind of an if-then statement. If this happens, we do this. If that happens, we do that. So we don't have like a bias on these things. We're going to go with what they tell us. Alta has been showing relative strength after the big gap down, and we want to see a pullback and a hold of this level. Hopefully that happens and we get an entry on that. Twitter is pulling back, has been a relative strength stock. I want to see how it reacts to the gap level here. So 38.70, let's see if it holds that gap and bounces. That would be a good rubber band setup at that point. There are some good spots for rubber band setups if they happen. BA, we've been waiting to get into this one. Let's see how it reacts to the moving average that it's coming into right now. And then Toll, housing stock. Look at that hammer that it's forming right here at the 9. KBH as well. These guys have been showing relative strength and are doing that again today. ERX along with oil. How does it react if it pulls back to the bottom of this range? And again, this would be a really good risk reward spot. So that's what I'm looking to do. I'm going to be really cautious right now. There's no need to just put on trades. If I get a really good signal, I'll add something, heading into the end of the week, either today, tomorrow, or Friday.